The S&P market has rallied since January 18th till Friday, the 27th. We had predicted a rally until early February, and we are still considering that there's a high probability the market will see 5,000 by the first week of February. Today is January 27th, and I want to go into some of the information that is helpful in terms of interpreting this behavior and what we expect longer term going forward. Now, we see from our cycle work that there has been the expected path based on the 7.5-month cycle and roughly a 2-year cycle. It's actually 540 trading days. They agree with each other. They both call for a high around February 1st and another potentially on February 9th before a decline into mid to late February, although both of them call for somewhere between the 26th and 28th as a possible low. Now, after that, we're expecting continued rally until April. Remember, we've been bullish, continue to be bullish, until April of 2024. Now, what's interesting at this point is price-wise, our matrix channel indicator on the large scale, we had resistance at 49.08. And on Friday, the S&P closed at 49.07 and change. It's extremely close to a major resistance level. Those levels are hard to break through. Of course, it could by a few points and a few days, but this is a major scale resistance level. And if indeed the market does what normally would happen, it'll go up a little higher. The futures may reach 5,000. The S&P cash may not. But we should find that it comes down in a corrective manner into the mid to late February point. This is likely based upon the 24-year cycle doing that and many other cycles that we've been looking at, including the short-term ones calling for a low in late February, followed by another rally. However, if the 49.08 is broken above for a few days and closed above on the cash S&P, it's very strong. The market is very strong. And we've been saying for some time we're expecting much higher prices in April. We're also saying that David Hunter's projection of 7,000 was way too much, that we didn't expect to see anywhere near that price. But if it breaks above this 4,900 level on the cash S&P for a few days, it could be extremely explosive. And if it cannot come down, we're still expecting it to come down in February. But if it's a minor correction, if it can't come down very far, this is another signature that potentially the market is in a extremely bullish phase, which will go significantly higher by April. The other thing I wanted to point out is the 7-year cycle. The 7-year cycle is a very important player right now because the low in October of 23, October 27th of 23, that was the 7-year cycle low. Now, also our momentum balance technique, which we use for price projections, which is a reliable tool, is calling for this week a potential high of 49.60 on the futures and a potential of 50.25 if the price continues higher until the first week of February. It conceivably could do that. But the 7-year cycle is very bullish. As a matter of fact, on our pattern recognition software, it came up as the best match for the last 12 months if you look at 110 years of data. 2017 seems to be repeating the closest. Now, we've looked at the 7-year cycle not just as an isolated point, but we looked at every occurrence of the 7-year cycle. We looked at it in 2017, in 2010, in 2003, 7, 14, 21, 28, all of those, all the way back to 1904. And we looked at what happened when the 7-year cycle low came in. It turns out there were 17 occurrences of this. And we looked at what happens 15 months after the low. Where was the market 15 months, which would be the equivalent of January of 2025, including, so what happens after the election and a few months later. All 17, the market was higher than it was in the equivalent of that October 27th low, which is at that time 4,100 on the S&P. All 17 said we're going to be above 4,100 by January of 2025. 13 of the 17 were extremely bullish all the way up. They basically went up and didn't have much of a correction and then closed in January 2025 much higher. And you can see the numbers here. We're showing some of the examples. This one was up 38%, 44% during that 15-month window, okay? So there's a very good chance that the market will be strong until at least the end of this year, based on that one cycle. Now, in the 4 cases where it did not go straight up, there were 4 occurrences where it took out the low of 4,100 before going up at the end of the year. And those cases were 1939, 1946, and I believe 1918. And the lows in those cases came in July or August. So the market would rally still now, but it came down between April and August of the equivalent of this year to make whatever kind of dip is going to happen. Interestingly enough, that's where we expect the bigger decline. If there's going to be a big decline this year, it would start in April or May and go down into July or August. So even if it does that, it would basically, we would see some meaningful correction followed by a resumption of the rally till year end into January of 2025, at least. The 60-year cycle goes up into the late part of 2025. So we're not bearish, even though we could have a big break over the summer. That might be interesting. But before that, the market is likely to rally strongly until April of 2024. So we have the momentum balance technique, which is telling us that it should go above the prices that it's already reached, at least to the 49.60 to 5,025 range. We have the matrix channel line on the major level saying that 49.08 on the cash is an important resistance level, but if it can break above that significantly, it will go a lot higher. And we have also our shorter term matrix channels, which you can see very clearly delineate that the market told us to get in on January 18th, confirming our timing with actual empirical price-based, these are prices, price-based evidence and momentum-based evidence that allow a trader to use the timing more accurately. And right now that's still in a bullish position. It's holding upon the white moving average even now. It's made a very significant run. We've been up 6 days in a row, and the 7th day made a new high anyway on Friday, closed a little down, but we've basically been up for 7 trading days in a row, and that is meaningful, okay? It means that this market is a very bullish market and probably will continue to be. All right, I think I covered all the territory, and I just wanted to make sure that you guys were aware that we're looking at this from several viewpoints, from the point of view of the cycles, from the point of view of momentum with the momentum balance technique, from the point of view of price with the matrix channel lines. And they're all telling us a similar story.